Is real estate in India's Tier 2 cities less saturated and more profitable than property in top 10 metros? Faced with one of the worst slowdowns in recent history, analysts, brokers, buyers and investors across India are looking for clues to the question, which property markets going forward will do well if we buy into them today? So our realty debate today is property beyond metros, a better investment. Welcome everyone, I'm Manisha Natarajan and I'm joined by a star panel, Anshuman Magazine Chairman and MD CBRE South Asia. Also with us, Vineet Relia, MD Sare Homes, Om Chaudhary, CEO Fire Capital, Sameer Jasuja, founder and MD Prop Equity, and of course it is a prop equity research that we will base a large part of our discussion on. From our Mumbai studio, Anurag Jhawar, Business Head Consulting Research and Data Labs at PropTiger.com, and Arvind Nandan, Executive Director, RNA Housing.com. Gentlemen, welcome everyone. And before I go on to the discussion, I think there are some headline numbers from the Prop Equity report which has been released for us to consider. Let's just look at Tier 1 versus Tier 2 cities. What's happening? Market size of 19 Tier 2 cities considered by this report together have a total market size of 326 billion rupees annually, which is less than the market size of even Bengaluru standalone at 361 billion and Mumbai at 341 billion. Now let's look at the supply situation. What's happening? Supply in the 19 Tier 2 cities considered by the report is just 20% of the total average supply in top 14 Tier 1 cities witnessed in the last 2 years. So you've got top 14, then you come to the next 19. Guess what? Next 19 only match up to 20% of the supply of top 14. So it's still a very small market. Now look at the absorption or demand figures. Residential absorption in the 19 Tier 2 cities has fallen by 17%. So we are now talking about the recession and the downturn and saying who's actually withstood it more. Demand in Tier 2 cities has fallen by 17% as against a fall of 32% in the top 14 Tier 1 cities. So that's a big gap. This is last 3 years. Now fall in supply. Overall, the residential supply in top 19 Tier 2 cities has fallen by an overwhelming 64% in the last 3 years as against a fall of 40% supply in the top 14. So you have a situation where demand remains, actually fall in demand is not so bad, but supply or developers have less wherewithal to actually launch projects in Tier 2 cities. Final point, Tier 1 cities, price increase, annual increase if you look at it has been 10%. Annual increase in Tier 2 cities has been 9%. So in keeping that data at the backdrop, let's just look at a couple of big questions. Big question number one, are Tier 2 cities better than Tier 1 cities as realty investments? What is a question number two we will come to today? Are Tier 2 cities more recession proof than Tier 1 cities? Because everyone wants to also know what is an investment which will hold out better in bad times. Question number three, will second rung cities and state capitals revive faster when the markets revive than top ranked metros? We have two more questions, but let's begin with this one big question, Tier 1 versus Tier 2. Are Tier 1 cities or Tier 2 cities actually better than Tier 1 as realty investments? So let me start with the developer on the panel, Sare Homes. What do you think? I read a blog, in fact, on Sare Homes website, Vineet, which favored Tier 2 cities over Tier 1.
Okay, thanks Manisha. It's, you know, the way we look at it, if you look at Tier 2 cities, we are currently operating out of Amritsar and we are shortly launching Lucknow and hopefully Coimbatore as well. So what we are looking at is the Tier 2 cities, as you mentioned in the report, the price points have been pretty stable. They've been appreciations. The only limiting factor in the Tier 2 cities always has been volume. So what we feel is if the projects are scaled to right size, probably we also made a mistake going in for very large investments into Amritsar, and so we've corrected that. Going into Lucknow, we are going on a very small parcel. So what happens is the price corrections have not fallen versus a Gurgaon or a Ghaziabad. We are actually seeing a lot of pressure in terms of price points. And also the second point is, if the government does manage to work on surface transport and some economic drivers going into tier 2 cities, I think there are going to be major need in terms of home requirements coming up there.
Okay. Anshuman Magazine, even you've got an opinion, and you had written an article for tier 2 cities, keeping a close eye on them, saying that these could be some of the investment hotspots for the future, even though currently the employment generation potential of these cities remains much behind tier 1 cities. So, on that question, tier 2 cities better than tier 1 as realty investments? What would your answer be?
I wouldn't say they are better, but certainly as Vineet mentioned, the price points are lower. So it can give opportunities to a lot of people who cannot afford to invest in tier 1 cities. They could invest in tier 2 cities. But the fact remains, like again Vineet mentioned, the volumes are not there. I'm glad he mentioned that, because sometimes I feel that tier 2 cities we overestimate the capacity, the purchasing capacity and the volumes. But the fact is that tier 2 cities have done much better than over last 5-10 years. So relatively they've improved. But when you compare it to the tier 1 cities, there is, the skilled manpower is not there, the infrastructure is not up to speed, and most importantly, the job creation is not there. So the tier 2 cities will come in. Like I mentioned, it's an easier entry, but it'll take quite some time before the volumes come in there, before they become deeper markets. The fact today is the top 7-8 cities in India are creating the maximum jobs. And if you look at tier 2 cities, I think we always talk about Kochi or Moradabad or whichever other cities. But for me, the tier 2 cities are also Gurgaon, Noida, Thane, Navi Mumbai, which are next to major cities. And I would feel that first, if these are the places which will see more what you call economic activity than a lot of the other tier 2 cities. And they will be the ones where we will see more real estate activity than other cities. But no doubt, all of them put together, the tier 2 cities activity levels will improve. But for it to reach a significant number, it will take many years, I feel.
All right. First of all, Anshuman, you've just shattered all our hopes by calling Gurgaon a tier 2 city. I mean, there is no NCR market. Where is there anything to buy in Delhi? So please don't relegate Gurgaon to tier 2. We will have to close and end the debate right here. Okay. But I get your point that you have a lot of development happening around the big tier 1 cities or the large capitals. So tier 2 would come after that, the ones we are classifying. Okay, let me come to Om. Om, you've taken a bet. In fact, one of the rare investment firms which has decided we will take large land parcels at cheaper cost, which is available in tier 2 cities, and go with big township projects there. Contrary to all that our other panelists have said, that tier 2 cities are not ready for volumes. So, how did you brave those tier 2 cities, or why did you brave those tier 2 cities?
Actually, to understand, we should take a step back and look at the larger macroeconomic situation. If you look at job creation, and we get swayed by certain markets, the headline markets, and what is happening in those markets, and the size of one particular market in comparison to 10 other tier 2 markets. But if you look at data, if there are 2 jobs that got created, and our job creation data is not the most reliable, I must say, but whatever data we have is for every 2 jobs that got created over the last, say, 10 years in tier 2 cities, there were 3 that got created in tier 2 cities. If you compare the top 50 cities, the million plus population cities, if you look at the top 10, and those are the as a big private equity fund, it was natural for us also to get more excited about those. But, if you dig deeper, you'll find that, again, in GDP terms, the top 10 markets have 8% of the population, and they contribute 17% to the GDP. The next 40 have 5% of the population and contribute as much, 16% to the GDP. So if you look at it on a per capita basis, the tier 2 markets or tier 3 markets, all of what I'm talking about is actually tier 2 million plus cities, are fundamentally more attractive. You know, if you look at the population density there also, you know, I'm talking fundamentals, but that's where we are coming from. That's where we think tier 2 markets are fundamentally more attractive. Now, if you look at it from a large funds perspective, it makes more, you know, you get a bigger bang for the buck if you go to markets like the NCR, the MMR, you look at Bangalore. That's where, you know, you can put bigger dollars to work, and that's where you can get good returns. But if you look at the fundamentals, they are better. You know, your question in terms of what is a better realty investment has to be looked at in the perspective of, you know, risk-adjusted returns. You have to look at that. Now, you know, these kind of sail, and when they sail, they kind of hit the ceiling, but when they sink, you don't know what has hit you.
All right.
So that's what
return
is
for a
what
PE investor. Clearly, you're saying that tier 2 cities are a better investment than tier 1 realty investment. All right, Anurag Jhawar, you actually come face to face with the buyer. How much do tier 2 cities sell? How, you know, in terms of volumes, they seem to me, as the prop equity report suggests, they're tiny. Entire 19 markets that were considered by the prop equity report do not even make up to one city of Bengaluru. So is that sense that it's still a very small part of the big real estate game in India, correct?
Yeah, right, Manisha. So if you actually look at some of the figures which the report suggests, overall it clearly demonstrates that the volume from these cities is very low. And again, if you delve deeper into, say, a project, typical project size of a tier 1 city and compare that to a tier 2 cities, the size difference could be 4 times to 5 times. And if we go within tier 2 cities and look at some of the cities of South India, probably the sizes are around less than 2 lakh square feet per project. So obviously, it cannot, at the end of it, if you accumulate everything from tier 2 cities, cannot match to the might of tier 1 cities. However, having said that, the fundamental difference to our mind is that a tier 2 city by nature is more end user driven, and tier 1 would be having a mix of end user as well as investment demand. And hence the propensity of these markets, a tier 1 market, to increase the price will be much higher compared to tier 2. So though the prices are affordable in tier 2, but if you look at the report of prop equity, it says that the prices have increased by 10%, and whereas in case of a tier 2 on a higher base, tier 1 on a higher base, it has increased by 9%. So definitely there is a demand in tier 2, but you know, a tier 1 on a higher base, if they are giving you a return of 9%, I would think that the game is more towards tier 1 and not tier 2 in the near future. Right?
Okay.
From a long-term perspective, obviously.
Okay, Anurag, I think the numbers are because it's a 1% difference. The prop equity report actually says tier 1 cities have given you 10%, so higher return on a higher base, and tier 2 actually have given you 9%, so lower returns on a lower base. All right, I'll come back to you, but let me just also get Arvind's view. Arvind, I mean, housing decided to go to 101 cities. When that press release came out, I just almost fell off my chair. I said, where is the depth? I mean, you have only 40 cities which have a population of more than 1 million. I mean, if you go below that, ek cycle pe you can cross the entire city. What do you make transparent? But there must be some logic for you to have actually ventured into 100 cities or 101 cities. So do you believe that story is a strong one and a better one than tier 1?
There are 2 ways I can answer this, but let me not take the housing position right now.
Okay.
I'll stick with the debate and the soul of the debate. You know, I've heard all the points that were being made, and I think they were all different parts of the same machine. You know, I have a fundamental proposition or a fundamental viewpoint here, which I think was very closely brushed by Anshuman in what he said. You know, the first thing is to remember that people do not live in real estate. People do not live in buildings. People live in socio-economic environments. And socio-economic environments are built when there is a place to work, when there is a place to survive and carry on your life in a full bloom manner. The problem with the tier 2 or the second tier or third tier cities is that the overall economic activity does not measure up in its size or its magnitude with the tier 1 city. And that's where you see this huge, you know, I would say a magnificent difference that we see. I mean, I have lived in a lot of tier 2 cities. I can very well clearly say that the scale of economic activity, the kind of incomes, the kind of overall GDP produced by a tier 2 city doesn't just measure up. And for that to scale up to the level of tier 1, it's going to take a huge amount of time. So whilst, it's a good proposition, it's not really going to actually measure up with tier 1. Now, the other point is, the question constantly being asked is that whether it's a good proposition to invest. Now, I think that's a double-edged sword. What is a good proposition? Is it something which is at a good entry price, or is it something which is good to build over a period of time? If it is something which is a good entry price, probably yes, it is the answer. Tier 2 are the answer. But if you're looking for something to scale up and scale up in the manner that tier 1 scales, we are not yet there. So as of now, I'll probably be more in favor of saying that tier 1 still remains the major or the cutting edge proposition, with tier 2 being a horse that's really climbing, which is really starting to gallop. But there's a clear difference right now, and my favor is for tier 1.
All right, so you vote and you answer that yes, it's tier 1 still which has a big edge over tier 2. So let me come to Sameer, and the reason I come to him last is because he inevitably ends the discussion with a pretty good summary and an answer. So Sameer, your report, the findings, we've already discussed, flashed them on television, and you've listened to every panelist here. I can clearly sense that there are some champions of tier 2 cities like Om and perhaps Anshuman to some extent, but most others say that it is tier 1. If you just had to compare in terms of investment, if I had 50 lakh rupees, where should I go, tier 1 or tier 2?
See, Manisha, the attempt of this report was not too many people have ever done research on tier 2 cities. Today we're going through huge challenges with respect to tier 1 cities, so one wanted to find out what's really happening on the ground with respect to tier 2 cities, with respect to absorption, price variation, supply, inventory overhang, and so on and so forth. What we've been able to find out through this report, is that the market, as everybody's rightly pointed out, just summarizing a few points which may have got also missed. One is the market is very small. The second is, when we talk about price appreciation of 9%, a very important point that I have to make, which tier 1 cities have to learn from tier 2 cities, is that 9% appreciation where the land cost is much lower. Yet they are being able to build with a lesser price rise compared to tier 1 cities who keep on complaining about high prices of construction, and that's why the prices can't come down, and so on and so forth. The third point that I wanted to make is the impact of end user versus investor. Now, these markets clearly demonstrate that they are more end user driven than investor driven, and that's why the beating that they have taken is much lesser compared to the tier 1 cities. So when the key question that you asked me, whether I would put 50 lakh today in tier 1 or tier 2, I have to be an extremely intelligent investor if I have to go in tier 1 even, because tier 1 cities can have now negative appreciation or depreciation going forward, which may not happen in tier 2 cities. If you're really sharp and you go in some micro markets in some tier 1 cities like Bangalore or Pune, you may still survive. But say if you were to go into a Noida, you don't know, your 1 crore rupees could become 70 lakhs even. So you have to keep into mind that also, that we are going through a cyclical slowdown in the real estate industry, where clearly what has been seen in the best tier 1 cities is price depreciation than price appreciation over the last 1.5 years. So from that point of view, tier 2 seems better than tier 1 if you're just looking at price appreciation as a point.
All right, okay, that's a fairly strong statement to make, that tier 1 cities could see much higher pressure than tier 2 cities, because tier 2 cities are end user driven, which leads me to my big question number 2. Are tier 2 cities more recession proof than tier 1? I'm not so sure, Anshuman. If I look at a market like Lucknow, I would say that, or even Ajmer Road in Jaipur, I mean, are they seriously that much more recession proof and end user driven? Haven't some of the tier 2 markets also become a huge investment play?
No, absolutely. And I think that's why I was going to say that we have to define and shortlist which tier 2 cities. Bhopal behaves totally different than Lucknow does or Jaipur does. And there is a city called Raipur, which I was quite surprised has several flights daily from Bombay going there, because there's a lot of natural resources, steel factories, etc. So the tier 2 cities also differentiate in economic activity, in infrastructure, the investments which are gone. So we really have to first differentiate which tier 2 city one should go to. There also, for example, Surat depends on diamond trade. The diamond trade overall is slowing down. That certainly will have impact on the real estate market. Lucknow depends on a lot of government employees putting money there. So we'll have to really dive deeper before thinking which tier 2 city to invest. And number two, I don't think they are more recession proof. They could be more recession proof in the sense that the higher you go, the harder you fall. So if in the tier 2 city you've just gone up a bit, so from that point of view, they fall maybe less compared to a Mumbai and Delhi where the price rises have been incredibly high. And there are, like Sameer mentioned, certain tier 2 cities where there are more end user driven. It is a more end user driven market, and the volumes are low. And there is a steady absorption of the supply which has come in, where especially in the tier 2 cities where there is no oversupply, and that way they may be less recession proof. But overall, when the market slows down, it does impact all the cities because the Indian economy is still maturing, and unlike China and others, most of the tier 2 cities still don't see that much economic activity, or the purchasing power is not there.
All right. So you're saying it's just the higher you go, the steeper the fall will be, and for that reason, perhaps alone, tier 2 cities could be a little bit more recession proof. The shock, at least, of your capital values coming down could be more cushion. On the other side, we're going to be back and take a look at how do you cull out within the tier 2 cities some of the top investment destinations. If you've got less than 40 lakhs, or you might not have a choice but to look at a tier 2 city, or if you have a home that you need to live in any of these tier 2 cities, where should you opt or where should you go? We'll also bring you India's top 10 cities amongst tier 2 culled out from an investment attractiveness perspective from the Prop Equity report. So stay with us.